This is placeholder media that you'll see if you add a layout to an empty scene. You can go ahead and delete it.
Three stocks ran 30% in 24 hours this week. Real companies, real earnings, real institutional money behind the catalyst. The kind of move that makes you feel like you missed something enormous, and you might have. Or the crowd might be writing a story that the data hasn't agreed to tell. This is what we're here to sort out. Before we get into it, a quick note if you're new here. I'm not a trader. I've never sat at a trading desk or ran a fund. I've got an MBA in finance from Pepperdine. I used to work as a financial advisor for Prudential Securities. And about a year ago, I got genuinely interested and curious about one question. Can you build an AI system that finds real market signals before the crowd does? And so I had AI help me build a system just like that. And then I did something that probably seemed like a bad idea at the time. I started reporting my BuzzPulse systems results on a daily YouTube show. That means you can see the days it worked, and you can also see the weeks it doesn't work. All of it is on the table, on the record, on the dashboard. Welcome to Invest AI Savvy, where AI powers smart investing. Welcome to Saturday, May 23rd, 2026. This show is for educational purposes only, and it's not investment advice. So please do your own research, consult a licensed professional before making any trades. This week, the quantum computing sector decided it was having a moment. The catalyst was real, it was big, and it was named. On Thursday, May 21st, the Department of Commerce signed letters of intent to provide just over $2 billion in federal incentives to 9 American quantum companies. The funding source is the CHIPS and Science Act signed into law by President Biden in 2021. The specific awards, the 9-company portfolio, and the equity stake structure were assembled and announced by the Trump administration's Commerce Department under Secretary Howard Lutnick. The award structure is also notable. The government is not just giving the money away. The Commerce Department is taking a minority, non-controlling equity stake in each company in exchange for the funding. That's a meaningful departure from how the CHIPS Act has historically distributed money, and it matters for shareholders because the government equity participation can affect both the upside and the strategic direction of the recipient companies. IBM gets the biggest slice at $1 billion to build a quantum foundry subsidiary. GlobalFoundries gets $375 million to establish a domestic quantum foundry covering multiple architectures. The remaining funding is split across 7 smaller quantum companies, most of them receiving $100 million each. The recipients you've probably seen in the news this week, the ones whose stock ran up the fastest, are D-Wave Quantum, Rigetti Computing, Infleqtion, Atom Computing, PsiQuantum, and Quantinuum. A smaller silicon spin specialist called Dirac is also getting up to $38 million. Now, here's where it really gets interesting for us. 3 of those names ran 30% or more on the news. The BuzzPulse system saw one of those 3. It didn't see the other 2, unfortunately. And today I've got to be honest about both halves of that. The one it saw was Rigetti Computing, ticker RGTI. The 2 it didn't see were D-Wave Quantum, ticker QBTS, and Infleqtion, ticker INFQ. Let me explain what happened because it tells you something real about how BuzzPulse is built and where its blind spots live. RGTI was the big picture Friday morning, but Rigetti Computing was also in the system's coverage universe all week. It was getting tracked, scored, ranked, and showing up in the surge data. QBTS and Infleqtion were not in the coverage universe at all. The BuzzPulse system didn't see them in spite of their big 30% runs. That's a different kind of miss than declining to lock a signal. That's a name that never made it to the scoreboard. The reason comes down to how BuzzPulse decides what to track. The system pulls from 3 ticker files: large cap, mid and small cap, and OTC. Those files are rebuilt daily from financial data with market cap thresholds attached. To make the mid and small cap file, a name has to clear $250 million in market capitalization. Rigetti Computer sits well above that line, so it's been in coverage for a couple months. The QBTS and INFQ, depending on the week and the exact methodology of their listing classification, can fall in or out of that universe based on float, exchange listing details, and how the data provider categorizes them. This week, they were not in the file. So when the quantum surge hit, the system saw RGTI light up on the social side, scored it, ranked it, and flagged the elevated surge. It saw nothing on the other two because there was nothing to see. They were not even in the universe that we were scanning. What happened to RGTI from that point is the part that actually matters. When I talked about RGTI on Friday, the system had it as a momentum name with elevated social attention and confirmed price action, but without the structured technical confirmation that would have cleared the A+ conviction threshold. The system was watching, but not committing. Since then, the move kept going. RGTI ran another 22% during Friday trading alone. The catalyst sharpened from a general quantum funding theme into a specific named $100 million federal award going directly to the company, with the government taking a minority equity stake as part of the deal. That is a different kind of news. That's a single name catalyst on a name the system was already tracking. Now, the broader lesson, which is bigger than this 1 week, the coverage gap on QBTS and INFQ is the more important data point for me as the operator of this system, because you cannot get better at scoring something you're not even looking at. The fix is upstream in how the ticker universe is built. I'm going to look at whether the current market cap threshold for the mid and small cap files is too restrictive, and whether there is a sensible way to include a small set of high volatility quantum and emerging technology names that currently fall through the cracks. I'll report back on what I find. This is part of doing the show in public that I love, and I also find genuinely uncomfortable. The system missed 2 names that ran 30% in a week. I'm going to tell you exactly why, and I think what the fix is and whether it actually works. That's the deal. So Saturday is where we do the homework and not just the parts that look good. The sample size on the proof layer is 39 closed signals, 59% hit rate on 3% plus moves at 48 hours. That's meaningful, but not yet statistically deep. I'm not going to tell you what to conclude from 39 signals. I'm going to keep adding to the sample and keep showing you every result, every day, every week. The system's greed top of the list today is Beyond Meat, ticker BYND. Greed score 0.422. Z-score 3.6. Momentum confirmed. Sentiment negative 0.19. Closed at 77 cents. The catalyst the system surfaced on this name is a social media post explicitly describing it as a bag holder stock cult with characterization of dumb retail buyers. That's not a bullish catalyst. That's a warning. When the loudest voices around a name are describing its own holders that way, the system reads that as greed and not conviction. BYND is on the greed list for a reason. Also on the greed list is ticker SPCX. Greed score 0.349. Z-score 3.7. Momentum confirmed. Sentiment positive 0.35. Now, I need to clarify exactly what the system is actually picking up. Until April 7th of this year, SPCX was the ticker for an actively managed SPOC and IPO ETF run by Tuttle Capital. On that date, the ETF voluntarily changed its ticker to SPCK to free up the symbol. SpaceX has since filed for a roughly $75 billion IPO and is reportedly planning to use SPCX when it lists. So the social chatter the system is detecting under SPCX right now is almost certainly not about the old ETF. It's retail attention building around the SpaceX IPO filing, with some Starlink adjacent news pulling in additional lift. The price the system is reading, around $22, is the residual ETF price under the old symbol, not anything to do with SpaceX, which is still private. This is the same family of problem we just talked about with QBTS and INFQ, except in the other direction. The system is seeing real social attention, but attaching it to a ticker that's in the middle of changing what it represents. So SPCX is on the green list, and the warning is not that the underlying asset is dangerous. The warning is that the signal itself is contaminated. You're going to have to wait for the IPO. The macro calendar for the coming week is pretty clean. No CPI, no PPI, no FOMC decision, no major job prints. The tape is quiet on the calendar side. What the system will be watching instead is whether the quantum cluster resolves or reverses. A retracement in QBTS below key intraday support would be the cleanest signal that the sector rotation is exhausting itself and profit taking is spreading. If that happens, the system will be watching whether SOX absorbs that energy or whether it follows the quantum names down. Bitcoin dominance is sitting at 58.1%, down 3.3% in 24 hours. The crypto intelligence layer is showing XRP, Dogecoin, and Polygon with moderate buzz and no strong catalyst. The system sees no crypto signals that made the ranked equity cut this week. That's a noticeable data point in itself. All 6 ranked assets this week were equities. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.